Good afternoon. George Cavaligos for HFT Bonds and Notes. Another down day, closing near the lows. I sent out a chart on the June bonds with some levels that I've highlighted, and the idea that we've had 3 nice down days here. We got the unemployment number popping up in 2 days, and the Thursday before non-farm is typically a corrective day. I don't see any signs of solid bottom down here yet, but if you're short, you want to move your stops down nice and tight and be ready for some kind of a bounce, I think. But probably after a lower low, we're kind of in a no man's land here. I don't know if these algorithms are really fine-tuning the screw over the technical analysis guys, but over the last couple weeks I've noticed that the market that used to hit Fibonacci targets and Elliott extensions and Fibonacci extensions and those types of things pretty much to the tick, which is one of the reasons I really like to trade the 10-year, isn't working anymore. Like today's lows, I don't have anything magic down around 130, 104. You look at the fib retracements, you look at the extensions. We've got some targets at lower levels. Our favored 618 retracement that's worked really well over the last couple months in these kind of corrective fashions is way down at, oh my god, 130.16 plus on the 10-year. It's a long way from here still. What are we, another a little more than another half a point from here. I don't know if we're going to see that through tomorrow. Want to probably hope for a bounce here and maybe look for some cheap puts to ride through the non-farm data on Friday. We've seen after the ISM data yesterday, we saw some guys jump their estimates up, but not a lot of increased estimates on the non-farm data yet. I think most people are down around like the 165, 175 area, and somebody pointed out if you looked at the ISM employment index and correlated it with the non-farm payroll data, the ISM employment data was pointing to a $200,000 to $250,000 non-farm payroll number. So I think we're leaning towards that idea. I'm hoping we get a bounce in the market here, maybe after a lower low. We're not seeing anything in terms of any kind of real buying showing up down here. We did see some good selling out of Asia and London yesterday. I think a lot of the hedge funds that were long probably stopped themselves out last night. That's what drove the market lower after yesterday's frustrating intraday trade. And now we have to look forward to the unemployment number. Jobless claims tomorrow could be a little helpful for the bears. Maybe we get a big jobless claims number, the market spikes down, and then we recover and look for some kind of a bounce, into the Friday morning non-farm data. Be my perfect scenario. Let's realize we all don't live in a perfect world, unfortunately. Give the benefit of the doubt to the downside still. Look for rallies to sell. We had one trade today that we highlighted in the chat, was the bounce into the buyback from the pit session open lows. I think 10 o'clock almost exactly was the high for the bonds and notes. And then we've had this slow kind of grind lower into the lows again as the pit session closed, and as we're still sitting here grinding around the lows. So I'm a little concerned too that we're not getting open interest increases. We did get an open interest increase in the 10-year yesterday. We didn't see anything increasing in the rest of the treasuries yesterday. It was still, after the rollover, it's been all downhill since the rollover increases that we saw. I'm not sure what that means, but it's not a trendy type indicator. That's why I'm kind of leaning towards this whole trade as being part of a bigger corrective pattern. But the objective of this corrective pattern, could be the old lows. And if you look at the June contract, those old lows on the June 10-year are down 129.19. So another point and a half. So let's play for the downside, look for some rallies to sell. Hopefully we can get something of a bounce. Markets, during the day have been very frustrating with very little volatility. I really think the algorithms are dampening the enthusiasm for people like me to trade intraday. I seem to have better luck and more volatility trading at night lately. where I believe there's less algorithmic traders and less of this central bank stuff going on. Okay, free markets for free men. Remember those old, who was it, RB&H jackets on the trading floor? Love those guys. Have a great night, everybody. We'll see you tomorrow.